Welcome back, champions. Another mind-boggling stock news. For the past decade, gold has been a serial underperformer. However, 5 signs suggest that it may be the precious metal's time to shine. These reasons are: Number 1. A dovish Fed is a positive. The theme of the U.S. Federal Reserve was hawkishness. A hawkish monetary policy refers to a stance taken by central bankers that emphasizes a proactive approach toward controlling inflation, often involving higher interest rates and tighter monetary measures to cool down economic growth. However, after recent inflation readings have come in cooler than expected, the market expectations for the Fed funds rate suggest 4 interest rate cuts in 2024. Lower rates should be a bullish catalyst for gold prices because lower rates tend to weaken the dollar. As a result, investors will turn to gold as a hedge against currency depreciation. Number 2. Commercial traders are overwhelmingly short. Commercial traders are entities or individuals engaged in business activities related to the underlying assets being traded, in this case, gold. These traders are typically involved in the production, processing, or distribution of commodities and goods. Commercial traders often use futures contracts to hedge against price fluctuations, managing the risks associated with their core business activities. Historically, traders want to fade commercials when it comes to the gold market. Currently, commercials are more than 70% short. Number 3. Prices emerging from a multi-year base structure. As the old Wall Street adage goes, the longer the base, the higher in space. It's difficult to find a longer base than the SPDR Gold Trust ETF. GLD is clearing highs not seen since August 2020. In my experience, the longer and more frustrating a base structure is, the better it works when it ultimately emerges. Furthermore, volume provided clues on Friday. Turnover was heavy at more than 2 times the 50-day average. Number 4. Massive deficit plus interest on deficit. The U.S. faces a mind-boggling deficit of $34 trillion and is growing rapidly. As the 2024 election approaches, investors must accept that fact that Biden and Trump, the 2 overwhelming frontrunners, are not known for their fiscal conservatism. Furthermore, interest payments are swelling, ranking 4th in spending. In other words, don't expect a budget surplus anytime soon. The last surplus for the federal government was in 2001. Number 5. U.S. sanctions and BRICS demand. The U.S. has levied severe sanctions on BRICS members such as Russia and newcomer Iran. With Russia locked in a multi-year conflict with Ukraine and Iranian leadership funding proxy wars on U.S. troops globally, the 2 countries are essentially barred from using the U.S. dollar and are forced to seek alternatives. In an effort to de-dollarize and provide an alternative to the U.S. dollar, which is no longer backed by gold, the BRICS countries have been dramatically increasing their purchases of gold on the international market. A trend that should last for years to come and put a floor under gold and gold proxies. Would you take this golden opportunity to invest in gold? Let us know in the comments.